Reddit is set to IPO later today around $34 a share, valuing the social media company around $6 to $7 billion. In this video, I'm going to cover the business, the valuation, my key takeaways. I'm going to jump to the conclusion right now. I try to make these videos unrivaled for you. You're watching Unrivaled Investing. My name is Daniel. My quick takeaway from thinking about this, and we'll cover this more in this video, is that for speculative investors, I could say, you could make the case that at around $34 a share, or maybe low 30s, you could actually say with extremely solid execution, the stock price could work out very well over time. The challenge is that it requires exceptional execution. We'll talk about that. And I also suspect what's going to happen, at the time of this video recording, the stock hadn't yet priced, or they were saying it was being priced around 34. What I suspect is actually going to happen is that when it starts trading, you get this Wall Street pop, because that's the game they play. So that all of a sudden you get this headline like, oh, look at Reddit's up 50%. Holy moly. Let's pat ourselves on the back. How brilliant we are. That's typically what they do. They price it so they can look at how brilliant they were that the stock popped. I personally view that as a sort of a mispricing based on, that's money that the company could have raised for themselves. So let's actually think about the underlying business, valuation, and takeaways as we look at this. So as we look at Reddit, it was founded in June of 2005. Their mission is to effectively bring community, belonging, and empowerment to everyone in the world. And it's going to be trading under the ticker Rddt when it goes public in the next day or so. When you look at the size of this company, you're talking about millions of users, 73 million daily active users, 267 million using it on a weekly basis. You have hundreds of thousands of active communities and 16 plus billion posts and comments on the website. So a lot of people going to it. Now, this is by no means in the same scale as something like Meta, which literally has billions of people. You're talking about a couple 100 million on their platform. But one could argue if you approach, if you're able to tap into more of the mainstream, maybe that could suggest longer term growth tailwinds for them. But so far, you're talking about a company somewhere between, let's say, 100 million and let's say 300 million in users. And so what makes Reddit special? And so I read through the different financials, the filings, so that way you don't have to, unless you're so inclined, to sort of call out what are the things that make it special. And the key aspect is that they're trying to set up a social media site that's just different from others, where they said 75% of respondents said they believe Reddit is a trustworthy place. It's authentic. It brings a human perspective on any topic and manageable. 95% of respondents said there is a community for everyone on Reddit. 85% said Reddit is where they learn about the topics they love the most. And 83% recognize conversations on Reddit as more on topic than anywhere else on social media. So this is, they're providing a bunch of different surveys to suggest that the group of users that they have on Reddit really find a lot of value. It's unlike just looking at, pictures or dog videos on YouTube. What you're saying is, hey, we're able to have deeper conversations on niche subjects because it's on Reddit, and that's the value. And, with these niche, subject matters that is appealing to people, you're going to have more relevant advertising. They say 61% of respondents said that they believe that the ads on Reddit are more relevant, and 61% of respondents said that they pay more attention to ads on Reddit than on other sites, because once again, if it might be helpful for them because it's very subject matter specific. And the last, and I think key aspect here, is that many Redditors, so the people using the site, are not actually on traditional social media platforms. They talk about 32% were not on Facebook, 37% were not on Instagram, 53% were not on Twitter. So they're saying you have a subset of users here that just prefer to have this sort of more brainy Reddit conversation, maybe brainy is the wrong word, versus the posting the Instagram of like, hey, here's my vacation, or here's my dog, or what have you. I have a dog or a cat flying around here myself, but I don't feel the need to post it on social media. So looking at the business model for Reddit, what has historically been primarily advertising, and the goal is to grow the number of users, grow the number of impressions over time, make it relevant, prove out the return on investment for advertisers. This is the crux of their business. Their goal is also to expand into other emerging and future, revenue drivers such as data licensing, AI model training, API access, as well as getting access to, let's say, commerce on the ecosystem, where they grow effectively an e-commerce system on their website where they can maybe get a cut of it. And so that's the future, but really advertising is the present. But you are seeing some data points suggesting that these other revenue drivers could become material over time. For example, Reddit announced, or actually this was more of a speculation based on what you've seen in various different newspapers, saying that Reddit has struck a deal. So this wasn't formally announced, I believe, has struck a deal with Google to make its content available for AI training, for the AI models. So they're, supposedly Google is going to be paying Reddit $60 million per year. Now, I imagine that's very high margin profit for Reddit. So that is an interesting development. Let's archive this data point in our head, $60 million per year, as we think about the valuation in just a bit, because, that is worth thinking about. And then in terms of the e-commerce aspect, one of the, the r/watch exchange, that's one of the Reddits that is the most popular. It's in the top 1%. Management calls it out, and it's actually called out a couple of times in their filings as an example of, we help enable this e-commerce. And this is where people trade, buy or sell watches, and it might be a helpful exchange. 366,000 members around the world, buying and selling these products. I just find it to be interesting. Is this potentially a source of e-commerce for them in the future, where they say, hey, we're going to get a 1% cut and we add all these features, or a 5% cut, we add all these features. So that way, you have greater trust with the people looking to sell or trade a watch. I just, I'm thinking about this, and I don't really think it's like 10x better than what, let's say, you could do elsewhere with something like an eBay. Now, correct me if I'm wrong if you use the site for e-commerce, but it just strikes me as hard to see why this would be unrivaled at this point. Looking at the business, looking at the actual financials, and it is very clear this is really an advertising business. Yes, they might be signing, AI deals to license their data, their users' data. But, looking at the historic financials, 95% plus is advertising revenue. They do have other revenue, which represents like premium subscriptions if you don't want to see advertising, and some of the, maybe some of the data licensing. But so far it's been very tiny. And it's really North America. It's the United States, which it represents the vast majority of their revenue as well. And so how should we think about Reddit's valuation? There's rumors that it's being priced around $34 a share. Who knows where it opens up? It hasn't started trading at the time of this video, at the time that I'm making this video. And in full disclosure, this is not financial advice. Also, quick plug, recently an Unrivaled Investing subscriber posted in our exclusive Discord that, and this is a direct quote, "I've recently paid my second annual subscription and couldn't be happier. I've profited enough already to cover the next 20 years of subscription." It's not hyperbole. I actually did the math. Come check it out yourself at unrivaledinvesting.com for compelling investment ideas. I share my own personal journey with real-time updates. And at the Discord, our exclusive Discord for premium subscribers, I personally let you in, and I'm very active in terms of answering user questions. Thinking about what are the biggest challenges that Reddit faces, this is a question I asked based on their financials that we've uploaded at AI Ticker Chat. AI Ticker Chat, using artificial intelligence, comes up with these top 3 conclusions in terms of what are the biggest challenges. And I largely agree, which is it's about the monetization of this company, of this product, is how do you effectively grow your revenues without alienating your user base? How do you manage moderation of the content, where you say, hey, there's a fine line between what's acceptable and what's free speech, and what's, you don't want people crossing the line with things that will hurt the advertising population. And that's a challenge that Twitter has seen with Elon Musk, where he's saying, hey, this is going to be a bastion for free speech. And then the advertisers say, well, we just don't want to spend our money there because we don't want our Disney Plus advertisement to be right next to some, let's say some shady product merchandise. And then the key aspect is, not only are you looking to grow your monetization, but you also want to grow your user base and engagement. I think this is actually going to be a bigger challenge for them longer term, just because the thought process is what you really have with Reddit is people exchanging ideas, exchanging, perspectives. And it is, while a lot of the commentary is, sort of goofy, it is brainier, I would say, than something just it doesn't hit that same sort of neural stimulus of like, ooh, that's a pretty picture, or, ooh, this is a video. and where you just start scrolling through it. And so I think that does create just the medium in which people are communicating with each other, which is primarily pictures. I mean, primarily texting, though there are pictures and videos. It does sort of change the dynamic versus something like YouTube, which is you don't think of the conversations on YouTube. You really think of the videos, hence you're watching it. And so there is the challenge of the medium, I would say, with Reddit, which is that it does make it harder for it to become like a multi-billion user platform over time. So that is something for investors to consider with Reddit. Looking at their financials, overall, I don't like to see this. You're talking about not fantastic growth, around 20% revenue growth. I wish they would show more of their revenue history. I wonder why they haven't. Maybe, there was a recent uptick in growth. What's been going on here? I think it's very deliberate when management doesn't show you some of this historic data. And plus, the company's been around since 2005. Now, maybe they don't have audited revenue, but they could show some sort of non-audited figure to say, hey, ballpark, this is where we were. There are different ways to get around it. Also, this is a company that really is subscale. That's the challenge. Now, they have very high gross margins. For an advertising business, it's, your cost of servers, and then, that could be it in terms of gross profit. So each dollar you get in advertising, very high profit margin, but then you have these fixed expenses you need to cover. And you see these expenses with research and development, sales and marketing, general and admin. So, sales and marketing barely grew. I'm thinking, what are they even spending sales and marketing on? And get more users effectively on their platform? That only increased by 5 million, but it shows you the perspective that this business could get a lot of leverage in the future, where you could have sales increase significantly while these costs could stay flat. And then you could go from significant losses, significant cash burn, to profitability. And that, I'd argue, is the case that you've seen with a company like Meta, where their core advertising business has between 30 and 40% profit margins. And so that's what I'm assuming long term. And keep in mind, this is a hypothetical valuation framework. Of course, stock price can go way higher, way lower. It depends on their execution. But if the stock opens around $34 a share, I did a little digging, page 90 on the prospectus. It shows you how to calculate the share count. So it really is going to be closer to $7 billion in terms of valuation if it opens up around $34 a share. Either way, that's around 6-7 times forward sales. I'm assuming that they grow, let's say 25 to 30% this next year. That assumes roughly 20% advertising growth. And then let's say you layer on another $60 million win from this Google contract, which is rumored. Let's see how this actually plays out. So this does assume an acceleration in sales. I think that would be prudent for management to IPO with the expectation that, hey, revenue might accelerate, hence we can get investors excited. But it's going to require a heck of a lot of execution in order to get a compelling return. And that's really what I'm trying to say here, is that yes, if you get tremendous execution and ultimately you do get to the Facebook type margins of 40% margins, which is possible for a social media platform, and you're able to continue growing at, let's say, 25% per year in the years ahead, which is faster than they did last year. So maybe I'm giving them way too much credit. But in this scenario, if they're able to get to peak margins, grow at 30% next year, 25% in the years after, let's say a 30 times earning multiple 5 years from now, then you're talking about 200% upside. So for a speculative investor that's willing to sort of say, hey, I'm willing to gamble about them executing on these elements, profit margins and growth, then you could actually see, 200% upside. Of course, as I already mentioned, stock price can go higher or lower. Personally, I suspect Wall Street is purposely pricing this for a pop. I look at this and I'd rather, on the downside, I'm saying 15%, annualized revenue growth in the years ahead, 20 times, market multiple, gets you to around flat over the next 5 years. That's the type of scenario that I would personally be, focusing on, as a company saying, hey, at what price does this become a compelling return? And at this, if I view this as the most probable outcome, this low case, so investors can think about these as different probabilities, where the high case might only be a 5% and the low case might be, 95%. And that's why I put this out here. There's a data point for you to consider for yourself. As I, reflect on this, my own personal conclusions, as I already mentioned, I suspect this is typical Wall Street gamesmanship, where they're doing this purposely to see some sort of pop and to get people excited. Oh, it's up 50% for a day. As I already mentioned at the time of this video recording, they've said it's going to trade at 34, but it hasn't actually started trading. Would I personally buy? Personally, probably not. That said, if I saw it trading in the 20s or maybe low 30s, I would think about it more, but in all likelihood not. The reason why is because, as I just showed with the hypothetical valuation framework, it requires a lot of work. It requires tremendous execution to get them to where you would say, hey, this has tremendous upside. They are currently operating at huge losses. And to get them at that peak type of margins of 30 to 40%, it requires really great execution. And arguably, I can find other things where the execution's already there and it's already trading at a cheap valuation. So I would rather find things where the execution risk is to a lesser extent. And if you don't execute, then you would get a much lower return than the framework I just showed. But let's see how it prices. I'm very curious about it. I personally called out Fairfax as one of my top holdings, as something where, you've seen execution over a multi-decade perspective and it's trading at cheap valuation. That's the type of setup that I like to see. Here you need the execution and it's trading arguably at a interesting valuation, but I wouldn't say it's really like crazy cheap. It's cheap if they have incredible execution over the next 5 years. If they don't, then the stock, arguably won't deliver as well. I hope this video talking about Reddit, the IPO, has been helpful for you. Thanks so much for tuning into Unrivaled Investing.